During Monday's Asian trading session, the gold market staged a strong breakout rally, with spot gold prices fluctuating higher and gaining over 1% intraday. Market safe haven sentiment heated up significantly, driving funds to pour into gold as a safe haven asset. On the fundamental front, escalating geopolitical tensions have emerged as the core driver behind gold's record high. On the news front, the United States has intensified oil sanctions against Venezuela, further pressuring the Maduro government. Meanwhile, Ukraine launched its first attack on Russian shadow fleet oil tankers in the Mediterranean Sea. The confluence of multiple geopolitical escalation news has significantly boosted gold's safe haven appeal, accelerating capital inflows into safe haven assets. In addition, the structural support from central banks' continued gold purchases remains intact. Goldman Sachs predicts that global central banks will purchase an average of 70 tons of gold per month in 2026. This trend has disrupted the traditional supply-demand balance of gold and become a key variable for the long-term upward movement of gold prices. Regarding Federal Reserve monetary policy expectations, data from the CME FedWatch tool shows that the probability of a 25 basis point rate cut by the Federal Reserve in January 2026 has dropped to 21%, while the probability of keeping rates unchanged has risen to 79%. The probability of a cumulative 25 basis point rate cut by March next year is 47.1%, and the probability of keeping rates unchanged is 43.4%. However, the competition for the next Federal Reserve chair has intensified, and market concerns about the independence of its monetary policy persist, further enhancing the long-term allocation value of gold. Combined with the structural support from central banks' continued gold purchases, it is expected to provide solid underlying support for short-term gold prices. Analysis of gold's short-term technical outlook from a technical perspective. Observing the daily chart, gold prices have successfully broken above the $4.390 all-time high and are moving strongly upward along the 5-day moving average, with an extremely clear bullish arrangement indicating strong short-term upward momentum. The Relative Strength Index, RSI, is trending upward around 76, suggesting there is still room for upward momentum to sustain the bullish trend. Gold prices need to break through the $4,400 level. If they can further stand firmly above $4,400, it will open up room for a move towards $4,450 and $4,500. On the other hand, if gold prices break below the important $4,300 level, traders may test the December 11th high of $4,285. If $4,285 is not held, subsequent focus will be on $4,250 and then the important psychological level of $4,200 in turn. Important disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading operations conducted based on this information are at your own risk of profit or loss. Please subscribe, like, and share. Thanks for watching.